Hello and welcome to my channel. Today I'm going to be doing a portfolio review and update for my growth portfolio. I wanted to make these just to keep a log of how my portfolio is doing and to track its growth over time. Right now it sits at about $30,000 and I hope to see its progress in the future. I'm going to go through my holdings one by one and kind of outline my thoughts on them and how I feel and my bull case for each of them. I'm going to be sorting them from the worst performing to the greatest performing, and we'll see how they have all done. So the first one is Fortinet, which is a cybersecurity company. This is one of the the second biggest cybersecurity company, and I bought into it a while ago, and it hasn't performed so well. It's been my worst performer. I don't think there's anything particularly wrong with it, but it was at a high valuation when I first bought in, and it probably wasn't the best idea to buy into it, but I still stand by it. And although there's another company that is on this list, PanW or Palo Alto, which is kind of similar to Fortinet but has more market share and has been holding up better. And those are my two big cybersecurity companies, but I still stand by this company, and even though it's traded down, I don't think it's really gotten worse as a company, and I still like it. But I'm not the most bullish on it compared to some of the other companies in the portfolio. The second one that has been my second worst performer is Unity. I actually bought into Unity pretty much right before they announced some of their controversial changes about like charging video game developers for like downloads or something like that, and then it traded down heavily because of that, and that's kind of unfortunate that they did something like that right before or right after I bought in. But I'm still kind of bullish on Unity. I'm not. It's one of those riskier sort of positions, and that's why I have a lower market value, because I don't have as much confidence in it as some of the other companies. It's just that it traded down super heavily when in 2022, when a lot of the Nasdaq growth stocks traded down, and I thought that it was a solid company back then, and that's why I started to buy in after its big dip. And it's dipped even more now because of some announcements that they've made. But I think it's still worth holding on to. I'm not adding more, and I wouldn't make it a big position. But for now, I'm still holding on to it. And then third worst, we have Moderna, which if there's one company that's on this list that I'd get rid of, it'd probably be Moderna, just because I'm not all that bullish on it, but I do want to have some exposure in biotechnology, and you'll see later on that there's another company as well that is kind of just there to have some biotech exposure. And this one was just not well timed, I guess. And Moderna's just been falling for like the past 2 years, ever since COVID kind of came and went. It has been on the decline, and that's pretty understandable. But I just haven't had enough. I haven't been able to convince myself to sell it, and it's such a small position that it doesn't affect the portfolio too much. But it has been, percentage-wise, probably the worst loss in the portfolio, because it's lost like $100, and it was only $270 initial position. But I don't know. I feel like Moderna is getting to the point where it's maybe traded down enough to where it makes sense, but I'm not going to be buying in, and I'll just be holding on to what I have. And then fourth, we have a company that I really like, even though it's the fourth worst performer, but I think Autodesk is a really solid tech company. It's kind of has a sort of monopoly on the like CAD for like architects and stuff, sort of software, that sort of area. And I think that it has traded down a lot, and it's at a really good spot to buy into right now. Like in terms of valuation, it's not super high like some other tech companies, and I think it is just really well positioned. Even though I haven't made any money off of it yet, it is a newer position, so it hasn't really had a lot of time to grow, and I really like its fundamentals, and I think it's a great company. So this is like one of those companies where unlike the first three, this is like I have a lot more confidence in this company, and I think it's a lot better positioned to recover compared to the rest of these. So I feel good about Autodesk, even though it's one of the worst performers. And then we have another small sort of position of Palantir. Even though this is towards the worst performer side, the reason for that is just because it's a small position. If we looked at this percentage wise, it'd be towards the top of the performers, because it's actually, for the amount of money that I invested, like 117, this percentage wise is a big gain, but it's just such a small position that it isn't a big gainer in terms of just dollar value. But this was a position where I just bought into because I thought it would be a small, sort of risky position, but with a high potential, and luckily it worked out. And if anything, I just wish I had bought more, but as it stands right now, I think it's a little bit too high to be buying more Palantir, and I'm just holding on to what I have and enjoying the small gains that I get from it. And then next we have Nvidia. In this portfolio, I don't have much Nvidia. I actually have more Nvidia in another portfolio of mine, but in this one, it's just a starter position. And Nvidia is at a really high valuation right now, and I don't think buying in right now is the best idea, but I have been just looking for the occasional dips that Nvidia goes on and adding a little bit here and there, and so far it's up to 589, so it's getting up there. But this is a newer position in the portfolio. I wanted to make a core position, but right now it's just tough to find spots to buy in. But it has so far performed pretty well. It hasn't gained too much, but that's because it's newer and it's a smaller amount of money. And next we have Square or Block. This is one where it's kind of similar to, I guess it's not really like Palantir, but it's like one of those companies that I think is riskier but has pretty high potential, and it traded down pretty significantly, and that's when I was buying in, and so far it's kind of slightly up, not too much, but it's been doing okay. And I was down heavily on Square for a while, so I'm glad to see it finally recovering. But yeah, I'm holding off on buying more. I like the size it's at in the portfolio, and if it trades down a lot, maybe I'll buy more in, but right now I'm just hoping it goes up and holding on to what I have. And next we have Google. This is actually my Google shares. Further down the list I have GOOG. I kind of bought both of them. They're basically the same thing. I just accidentally bought GOOGL one time, and that's why I have two positions. it's performed well. I think I'll save my Google talk for later down, because that's later down is what the bigger position. This is the small Goog L position. Then we have FICO. This is a newer position in the portfolio that it's kind of around the same time I started adding to Nvidia, I started adding to FICO. And similarly to Nvidia, both of them have just been skyrocketing, and it's really hard to find buy-in times, but it has been growing a lot, even though I haven't even bought that much of it. And I really like this company. Similarly to Nvidia, I think both of these are very fast-growing companies with just crazy growth, and I think FICO is in a really good position where they can take advantage of both like the success of like just the credit industry, and I think that is why they're really strong and they have a big monopoly on that, and just a really solid company fundamentally. And then we have Netflix, which is another newer position. Again, a lot of these positions for Nvidia, FICO, Netflix, these are sort of newer, but also not as big. I don't think I'd want to make Netflix like a core position, but I do think it's a solid company, and I do like its growth potential, even though it is already somewhat mature compared to a lot of these other companies. But I think it's just a really solid company, and I think it was on a bit of a dip when I was buying in, so I kind of took advantage of that. Now it's kind of traded back up. You see I have like $100 in gains. It's up quite a bit from where I bought in, maybe like 20%. I'm not sure I'd want to buy in too much right now, but I do like just picking it up every once in a while if it goes on a dip, and I think it's just a solid company that I want to keep as like a medium-sized position in the portfolio. And then we have PanW, Palo Alto, which is kind of the counterpart to Fortinet. And unlike Fortinet, PanW's actually still just been growing like crazy. Like Fortinet, as soon as I bought into it, it kind of dropped, but PanW really has been holding up well. And I like both of them, but PanW definitely is the stronger of the two companies and just has a bigger hold on that sort of cybersecurity industry. And I think they're just the bigger company. They're more solid in terms of fundamentals. But I do like both Fortinet and PanW. I think they're both worth owning. I just wanted to make sure I had both of them just to be safe. It's kind of like Visa and MasterCard. They're both just two giants in the industry. Not quite, because Visa and MasterCard are probably more even. PanW is quite a bit better than Fortinet, but it's similar in terms of they're the two duopoly in the industry. So I like this position. I wouldn't want to expand it too much right now, but maybe if it traded down like Fortinet has, I would consider adding more. And then we have Salesforce. This is actually a pretty small position, about the same size as like Nvidia or FICO, but it's actually performed super well. And that's because it's a really old position. I bought Salesforce a while ago, and when it traded down a lot, and then it kind of just went straight up from there. I was like waiting for it to go down so I could buy more, but it didn't really go down as much as I wanted to, so it's just always stayed a small position. And I kind of want to make it a medium-sized position maybe at some point, but I don't think I'd ever make it a core position, and I'm kind of fine where it is right now at just like a solid like $589, but it has had really good returns, so that is nice. I'm just holding on to it. And then we have Cloudflare, which another cybersecurity company. If you couldn't tell, I'm pretty bullish on cybersecurity. I really like the industry. I think it's just a really necessary sort of industry, and I like sort of the reliability, and a lot of them are subscription services and stuff, and they have reliable sources of income. It just seems like a very attractive industry to be in if you're looking for like free cash flow and revenue growth, and that's what I am looking for. And I mean, like, if you think about it, every company pretty much is getting more digitally involved and like making websites, putting their products online, and all of them need forms of cybersecurity. So that's why I think that I'm just bullish on the cybersecurity sector in general. And Cloudflare is one of those ones, and I haven't bought into it recently, but I kind of like it as like a small to mid-sized position. It's definitely a lot riskier than like other cybersecurity companies like Palo Alto that are a lot bigger. But I do think it has a lot of potential, and I have been down heavily on Cloudflare in the past, but right now it's trading up, so I'm just holding on to it and for now. But if it goes back down to where it was trading like earlier this year and stuff, and it drops, I might buy more. But I really like it. I really like just holding on to it at this point, and I think I have a decent size. It's a decent size compared to the rest of the portfolio. It's about like 3%, so that's nice. I like it right there. And then here's my other sort of biotech company, which is Crispr. This has been a kind of crazy one because it just trades all over the place. Like, I've been down the most on it, and then it just bounces up like crazy. And right now it's just up a lot, so that's good. But this is probably the riskiest company in my entire portfolio, and it's not one I'd really recommend, but I just, for the same reason I have Moderna, I just am holding on to it because I sort of want to have some biotech exposure. I'm not super bullish on CRISPR or Moderna, but I do just like that exposure, and I think they're worth holding on to, and they have potential, even if it's risky. And then moving on, we have Shopify. This is one where, it's another somewhat more risky holding, but it's one that I'm pretty bullish on. I really like online retail like Shopify and Amazon, which we'll see later. But so I want to have the main companies and the main players in that online retail space, and that's why I really like Shopify. And so far it's actually, or I guess more recently, it's been doing really well because it's been up. For a long time it was down, and I've had it for a while, and it's just been traded down, but now it's actually starting to go where I wanted it to. It's starting to go up, and I'm really bullish on this company. I want to keep adding to it. I like where it's at right now in terms of value, but I want to keep adding to it, so hopefully maybe it'll trade down a little bit so I can add some more. But I wouldn't want to add to it right now because I think this is like the highest it's ever been in my, at least that I've had while I've had it in the portfolio. And then next we have Apple. This is one of the more safe companies in the portfolio, one of the more reliable ones. It's just like a staple. It's a necessary company to have in pretty much any sort of portfolio, whether you're looking for growth or like dividends or reliability, just anything like that. It's just a really strong company. It's kind of hard to lose money when you're buying into Apple. It's just, I've just sort of been buying into it. Not even that much, I felt like, but it keeps growing, and it just is a solid company. And I like it as like a mid-sized position. I wouldn't mind having it as a core position, but I don't know. I'm just keeping it as like a mid-sized position right now, and we'll see. If it grows into a core position, then I wouldn't be upset about that. That would be nice. But yeah, I just really like Apple. I think that I'd like it to trade down a little bit, but because I think there's always sort of a premium that comes with Apple because of how strong of a company they are. But I think there's not really many bad times to buy Apple, so I don't mind just adding to it little by little every once in a while. For Costco, I feel like I could repeat a lot of the things I just said about Apple, because it also is just a very reliable company that trades at a bit of a premium, and I wouldn't really want to add to it right now, but it's really solid. It's just like Apple, I have a decent sized position, a little bit more, but both of these companies just very safe plays. I think both of them are just really reliable companies. I just want them to trade down a little bit, so they could be a little bit more attractive in terms of valuation, but I understand why they have a little bit of a premium because they're such great companies. But yeah, same thoughts as Apple for Costco. Really solid. And then moving on, we have Tesla, which is kind of one of those like roller coaster companies. It goes up a ton, it goes down a ton. Right now it's a little bit up. It's been way up in the past, but it kind of just goes crazy. It's one of my bigger holdings at like 2,800. And yeah, I feel like for Tesla, it's kind of like a mix of big potential, but it also is a bigger sort of company. And I feel like it's a lot, or it's at least a little bit safer than some of the other like riskier high growth companies, something like Square, or I don't know, Palantir, companies like that are, or even like Shopify, companies like that are just high growth, lots of potential, but still like definitely in the growth phase. I'd compare it more to like something like Nvidia, where both of the Tesla and Nvidia both are very high growth, high potential companies, but they're also just really big right now, and they're kind of already realizing like their growth and potential. They're already in the stage where they're a huge company sort of, and they're not like at a ton of risk of just like falling apart. Like they pretty much are well established. They're not going to, hopefully they aren't going to just crumble or anything. Like they're more reliable than companies like Square and stuff like that. That's just or like Cloudflare, for example, is another one. Just a smaller company that has a lot of high potential. These are bigger companies with higher potential, and that's why it's a core holding, because I think that Tesla just has a lot of potential, and it's already at a phase where it's big enough to where it's sort of already realizing that potential. And I do have some worries about the margins and stuff and just the car industry, but I think that Tesla is innovative enough to where they can overcome a lot of those issues through like selling software, like self-driving software would be really nice, and maybe going into like battery selling and stuff like that, and just other ways of monetizing their cars. So like the hope for Tesla is that they create a kind of ecosystem like Apple has with their iPhones, to where like you have your Tesla and then you have all your services and products that surround your Tesla. that is sort of my bull case for Tesla. And it's not a guarantee or anything that is going to happen, but that's what I'm hoping for, and I think it's worth the risk, because I think that the potential that sort of ecosystem would have is worth like the risk of the decreasing margins and the car company sort of industry stigma. So that's why I have Tesla as a core position. And right now it's, like I said, it's up, but it has been up more in the past. It's kind of been trading down a little bit, but I'm still holding on to it. And if it trades down much more, this is one I'm okay adding with at this price. It's traded down a little bit recently. I'd like it to trade down more. A lot of these companies have been trading up like crazy, and I think that they're going to come down a bit, because I think the valuations are just kind of getting insane at this point. So a lot of these companies, I'm just like, I don't really want to buy in right now, but if they trade down, I will. So yeah, that's just my thoughts on the portfolio in general. If you wonder why I pretty much say for every company that I want it to trade down a bit, because they all have been sort of on a huge winning streak recently. And next we have probably my favorite cybersecurity company, which is Crowdstrike. This is a cybersecurity company more focused on cloud, which is a very fast-growing sort of new industry or new field for tech, and it has been performing really well as well recently. It's been mostly like flat since I bought it, but just in the past month or two it's traded up, and I really like it, and it's a very solid company, really good fundamentals. It is riskier, similar to like Cloudflare, where it's still in the growth phase. I don't think it has positive like EPS or anything yet, so they're not really generating money, but the revenue is really good, and it's starting to work its way towards being like a cash flow positive company. So I don't know, I really like it, and it is on the riskier side of things, but that's why I like it more as sort of like a small to mid position. It's only $1,000, similar to something like Cloudflare, and that's sort of the position. I wouldn't mind adding a bit more to it. I wouldn't mind it being in the more like Shopify range, about like 1,500, but I don't want to add to it right now because of how much it's traded up. I'd like to buy it more around where my cost basis was, which is a lot lower than what it is currently. And then next we have Amazon, which, as I said before, I really like the e-commerce and like the online retail. I think that is here to stay, and that's something that's growing. And I think where a lot of traditional retailers, like for example Costco, might struggle because they might see slower growth, I think online retail is going to take a lot of that growth, and that's why I own Amazon, because I'm just really bullish on online retail, and it's performed pretty well so far. Like, I really like the growth it's had. I sort of got in at a pretty good time after Amazon had the big drop, and I've been buying in sort of on the recovery, so it's kind of a more recent position. But I really like the company, great fundamentals. I really like the strong position in cloud, similarly to Crowdstrike. I think cloud is really important, and both these companies deal with cloud services, so that's sort of another reason why I really like both of them. And right now it's a pretty medium to big size position, and I kind of like it that way. I don't want to take a huge stake in Amazon, but I do like it as a more on the big side of positions. And then next we have Microsoft. This is one of my more core positions, and it's just an amazing company. It's kind of like, it has like the same, similar to Apple, it has the reliability and just the lasting staying power of a company, but it also has a lot of growth, like where Apple is sort of maybe a little bit slower in terms of growth, at least recently. Microsoft seems to be just consistent, and honestly it's one of the faster growing companies, even though it's so huge and mature, which is amazing. And I think right now it's trading at a pretty insane valuation, and I again wouldn't want to buy into it, but that's why it's up so much for me, is that it's been trading up, and I really just love the company, and any opportunities I'll get to buy it at a more attractive price, I will. And yeah, I like it as a core position, and I think it's a solid company. And then we have Google, which is I know we saw the Google position earlier, but this is the bigger one. If you combine them, it's about $3,000, I think, dollars. And yeah, it's again another core position. I really like Google. I think that in terms of a lot of the big tech companies, Google is one that is actually at a reasonable valuation. It's not like anything crazy above the market. And I do understand that it's maybe not in as strong a position as like Microsoft in terms of like AI, or in terms of like Amazon and Microsoft for the cloud sort of side of things. But it sort of has its hands in a lot of those fields. There, like, it has AI, it has cloud, and it just has a really strong growth path. And it's also a very reliable, strong company. I just feel like it's going to do well. And the fact that it's also at a sort of cheaper valuation means that I can keep buying into this, and it doesn't feel as bad, and it doesn't feel as crazy as buying into other companies like Microsoft that have traded up a ton. So right now I really like Google, mainly because of the combination of it just being I compare it to some companies like Meta, Microsoft, Apple. It's like those companies, but it's actually trading at a really nice valuation. So that's why I'm really keen on buying into it right now. And lastly, we have Meta, which is by far my biggest position, and it's a core position. This is one where it's a very old position, and I was buying into Meta when Meta was at its lows, when it was down like 70%. So that's why I have such a big gain on it, and that's sort of like why it's gotten so big in comparison to the other companies, is that it just was bought at a really good point, and it was a core position back then, so it exponentially increased because it's been going on a really good streak recently. And Meta, I just same thing as Google and Microsoft and Apple. I think it's a really strong, well-established company that has a lot of growth ahead, and I really like it as one of my core positions. So now that I've kind of highlighted all my positions, I wanted to go over the portfolio as a whole and sort of my goals for it and that sort of thing. So as you notice, this portfolio is 90, maybe 95% tech. Like the only non-tech company is Costco, and I also have those like two biotech, Moderna and Crispr. And that's because this is just one of my portfolios, and this is kind of like my Nasdaq. It's my sort of high growth tech portfolio, and I really like tech, but I do have other portfolios that kind of are more well-rounded and not so focused on tech and growth companies. But I really have a goal for this portfolio of just focusing on tech and high growth and trying to grow as quickly as possible, but also picking safer companies that aren't going to just crash, because I mean, you see what happened in 2022, like a lot of the sort of highly speculative tech companies just fell down like 80%, and I do not want this portfolio to be in that position. So I'm kind of mixing like big tech companies alongside some of the middle to smaller tech companies that I think have very high potential but also are pretty safe and reliable companies. And so here, this is kind of just a show of when I first started the portfolio on May 24th and its performance over time. And this is something else I wanted to track for the video, is my comparison to other common indexes, because Schwab has this nice thing where it shows your portfolio against other indices, like for example the Russell 2000, which not many people care about the Russell 2000, but as you can see, we have completely outpaced the Russell 2000 by a lot. And here you can see sort of my investments and when I was in the red, like back when the portfolio first started in 2022, and sort of my growth and how the portfolio has started to gain more than I've put in, which is nice. The main one a lot of people talk about is the comparison to the S&P 500, which we've managed to stay ahead of for a long time, actually. A lot of the reason for this is because sort of around this time we saw a huge sort of rally for big tech, and of course I am heavily invested in like big tech and tech companies, so that's kind of where my portfolio took off. If you look back, especially in the beginning, we were kind of evenly matched, and then there was this drop off that happened like end of 2022 where the markets fell, and my portfolio, because it has more growth and speculative companies, it took a big hit, and we were trailing the S&P by let's see, probably like 15%. So it was a tough road, but this portfolio can jump back in an instant. Like if you look just a few months later, it was back tied with the S&P, and it's kind of been taking off ever since we've been on these sort of rally. You can see like when we do fall, like there was this little drop dip that we had recently. It does fall a lot heavier than the S&P, but we've managed to stay ahead of it, and I hope that the market keeps growing, and I hope that we are able to outpace it, because that is one of my main goals for this portfolio, is staying ahead of the S&P. Then we have the Dow, which is kind of just more steady, more reliable index. We've also outpaced this one, the Dow Jones. It doesn't go up very much, but it also doesn't go down very much. It was beating us for a while back then when the S&P was beating us. But yeah, during the times of high growth, this portfolio just shoots off. So we are beating the Dow as well. And finally, the last one, the closest one, the Nasdaq. This portfolio is really similar to the Nasdaq. I do think it's better than the Nasdaq because I think it's higher concentration into companies that are really just strong, and it has a higher concentration in like big tech, and I think that's why it's outperforming the Nasdaq, even though they're very similar. You can tell they look almost identical, but we are beating the Nasdaq, and I hope to continue beating the Nasdaq as well, even though the main index that I'd like to compare it to is the S&P, because that is one that a lot of people are invested in, and that's one that a lot of people know about. So yeah, that's the portfolio. It's at 30,000, 4,800 in gains, and I hope to continue growing it and showing the progress from now on. And I'll see you guys next time.